This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm thrilled to be joined by Ross Beaty. He's the chairman of Altera Power Corp and of Pan American Silver. Welcome, Ross. It's great to see you.
Thank you.
Now, Ross, you've said that you expect global growth to slow down. So how does that affect your investing strategy?
Well, it definitely influences it, because if global growth slows down, global consumption of metals slows down. So you've got to be really selective in what metals you do go after. You know, fortunately, the metals business is a non-renewable business, which means every single day mining companies eat their future, and they need to replace metals with new discoveries. Plus, it's getting harder and harder to mine and harder to get social license to build new mines. And all of those things serve to keep metal prices higher for longer. So even though the demand might go down, supply will also be constrained, and I think prices will still stay fairly high, and you will still have pretty good investment returns for most metals, but absolutely not all.
And you're a firm believer that gold and silver stocks will rebound. What needs to happen for prices to start moving up?
You know, gold and silver, like all metals, it's a cyclical world we live in. We've had now entering the 5th year of a bear market in all metals, but I look around and you know, gold has come down from $1,800 to $1,200 an ounce. It's still doing pretty well. Don't forget, it was $250 just 10 years ago. So it's still doing pretty well, particularly when the US dollar is so strong. And these things give me great feeling of conviction that silver and gold prices are likely to rise, you know, I expect beyond their all-time high set just a few years ago. There's all sorts of reasons why we don't have time to go into them all, but there's all sorts of reasons: macroeconomic reasons, microeconomic reasons, supply reasons, demand reasons, all over the map. I think precious metals will outperform all other metals looking out, say, 5 to 10 years.
Right, and why do you think that is?
I just said.
Why gold and silver in particular over, say, copper, zinc?
Yeah, I mean, really, because gold and silver are money.
Right.
They're investment metals, plus, in the case of silver, it has thousands and thousands of industrial uses. It's the best of both worlds. But really, when you look at how much paper money is being printed, you look at what governments are doing with the exchange wars that are happening, all the other chaos in the world, gold and silver as well will be refuges for an awful lot of people when things get weird. And I suspect they will absolutely get weird sometime in the next 5 to 10 years, because they always have, looking back through 1,000 years of history or 5,000 years of history. And silver and gold will be one of the beneficiaries of the craziness and chaos that's undoubtedly going to happen for some reason in the future. So for me, it's a great hedge, it's a great insurance policy, but just on pure supply side reasons, it's also a good metal to buy, you know, compared to, say, iron ore or coal or some of the metals I wouldn't go near with a barge pole.
Now, you've said that you prefer investing in the companies themselves. Is that because of the leverage?
I like the companies because even if I'm wrong, and even if metal prices don't go up, if they stay static or even go down, a company with a great business model of building good mines with lots of profits, just smart people, or a great discovery will always make people money, even in a bear market.
Now, you've had great success in the Americas. What do you think of prospects elsewhere?
You know, I've really invested all my life all over the world. You've maybe only heard of things I've done in Latin America. And actually, of course, Latin America's been where most of the public companies I've invested in have done the best. So I still love Latin America. It's a great place, and it will always be great. You know, I've dabbled in other places in Europe. I've got a really large private investment in copper exploration in Poland right now. And I'm dabbling in a few places in Africa. I always have.
Right, and that was West Africa. You recently made an investment in Burkina Faso?
Yep, Burkina Faso. And so, you know, there's some pretty interesting things happening in sub-Saharan Africa, in the gold business especially. Good profits. Even DRC has generated some pretty good returns for some companies like Lundin. Zambia has been great for a lot of companies. There are also minefields. There's a lot of chaos and mayhem that happens in Africa. You've got to be careful about. So of course the strategy there, like everywhere, diversification. Don't blow your brains on one investment and base everything on one investment, because you know things happen in these countries. But things happen everywhere. I mean, the whole world is tough right now for the metals business, the entire world. And I honestly don't know whether whether Burkina Faso is any worse than British Columbia used to be or might be in the future if we have the wrong kind of government. Things change quickly, and something can go from good to bad quickly and from bad to good quickly. So diversification is important.
What are some of the things you've learned over the years with some of your successes with Pan American, or raising, I guess, $1 billion in capital over the years?
Yeah. Well, what have I learned out of raising a lot of capital? First of all, you've got to invest it in the right things because it's very easy to spend money. It's not so easy to make money. I've had an extraordinary amount of just plain luck. I will say just plain luck. You can't count on luck, but the more times you buy a lottery ticket, the more likely you are to win a lottery. So keep drilling holes, keep staying alive so you can keep drilling more holes. That's how you find mines. Try to do it as much as possible with smart financial management. In a bear market, use other companies' money like joint ventures. In a bull market, get that stock price up as high as you can, and then carefully use that capital to drill holes and cross your fingers at the end of the day. The more holes you drill, in the more projects that are sound projects, the more likely you are to have a success.
Right, and what do you think mining companies should be doing out there these days? I mean, just keeping costs as low as possible, managing their cash? You
mean exploration companies or mining companies? Because there's a totally different reality between the two. One has cash flow, the other one doesn't.
Right, I guess for both,
Yeah, well, for mining companies, this is an absolutely golden opportunity to make acquisitions if you're strong enough to be able to do it. It's absolutely a buyer's market. It's a buyer's market, and you can cut really good terms. There's some companies like Agnico Eagle that are doing that very, very effectively. Unfortunately, a lot of other companies bought things at the top of the market. They paid way too much. Their shareholders are punishing them right now. The stock's cheap, and they have constraints to doing that. If you're an exploration company, it's a much more difficult thing. I would say if I was running an exploration company today, that I would try to position myself for when the bull market returns. It absolutely will, 100%. In fact, it'll return when nobody expects it to, and after everybody's thrown in the towel. That's when it'll turn around, and then a rising tide. All of these companies will do well, but the ones that will do best are the ones that get ready today for when that happens. Acquiring projects cheaply, making good deals. If they have to explore, they shouldn't explore too much. If they have to, use other people's money, other companies' money particularly, not their shareholders' money. Don't sell cheap stock, and just try to live for that other day.
Now, you've said that economic trends have become increasingly unpredictable. You've said things have gotten weird.
Yep.
What are some of the things that have surprised you?
Oh, just reel off a list. Who would have thunk that we would have seen 50% drop in oil price in just 2 months? Nobody saw that coming. That is so profound and disruptive to financial markets. It's incredible. Look at what's going on with exchange rates. Who would have believed that the U.S. dollar, the Japanese yen, the Australian dollar would have devalued 20 or 30% in the space of a few months? Not many people.
Right.
But that causes huge, and the euro, huge changes to international trade and manufacturing in one country versus another. So huge change. There's geopolitical chaos going on in a lot of places. Look what happened in Crimea. These sort of things, they can blow up and they can have a lot of unintended consequences. So exchange, oil prices or energy prices, the disruption that's going on in alternative energy today is profound. Solar power prices are just falling off a cliff.
Right.
So, in 5 years, I don't know what's going to happen to big utilities like BC Hydro and other utilities. It's so disruptive. Energy generation, energy transmission, and energy use. There are amazing new technologies to make us stretch our electricity just a lot further, which makes the household electricity cost even cheaper. LED lights instead of incandescent lights. They're 100th the energy consumption, 100th. These things are disruptive. So there's so many things going on. I could just keep going on. There's ecological issues, there's the climate problems. All of these are disruptive, and quite frankly, I'm not smart enough to know really how it's going to end up. But there's going to be winners and there's going to be losers, and a lot of the stuff that is happening is unpredictable. That's one of the reasons I have gold and silver as a refuge.
Awesome. Well, thank you so much for stopping by today, Ross. It was a pleasure.
Okay, my pleasure.